Welcome back to another week in review. We're going to be looking at the trading week of November 10th, 2025. We'll get that out of the way. Obviously, with the government shutdown, we still don't know what parts of this are coming out and what isn't coming out. So I'll go through what's in the calendar and whether or not we actually get it released. It's kind of the same story as the last few weeks. You know, if it is, it is, and if it isn't, then just expect it. Just expect them to gloss over it. So Monday we don't have anything major. We have the Cleveland Fed inflation expectations. Again, whether or not that comes out, I don't actually know. Tuesday is a bank holiday in Canada and the U.S. The market is open. The bond market generally is closed on these days, but the equity markets remain open. Wednesday to 9:20 to 1 p.m. we have Fed speakers basically the entire day. 1 p.m. we have the 10-year bond auction, so we could see a bit of volatility around 1 p.m. Thursday, we have CPI on the calendar, as well as jobless claims. Not sure if those are going to be coming out. I do have it marked. 12 p.m., we have crude oil inventories. 1 p.m., we have the 30-year bond auction. And 2 p.m., we have the federal budget on Thursday. And then Friday, again, we have PPI noted on the calendar, as well as retail sales. But again, whether or not those numbers are coming out, I don't actually know. So going to assume that they're not, but just obviously in the morning. These are all pre-market generally too, which at least for me, I'm generally not trading at that time anyway. So good to know that they're there, but I'm not expecting them to be released. So going into the indexes, we'll start with the S&P 500. 30-minute chart as we usually look at in these videos. So pretty volatile week. Some really big sweeping ranges both directions, which provided some really nice trading, both long and short, basically every day. So again, as a trader, you don't really have to be married to a direction in this market, especially when volatility is high, because we're getting, such massive sweeping ranges up and down where you can make money, pretty much any direction right now, which is great. So if your setups are more looking at the long side, more looking at the short side, however you trade those things, you're getting opportunities both ways, which has been fantastic. So bigger picture, the thing we talked about last week was, I'll go to a daily chart of the S&P 500. The bigger thing we talked about last week was the breakouts of prior weekly range, prior weekly balance. So the one thing I was saying last week is that, even with the emergence of divergences into the highs, I didn't really have a reason to look bigger picture short on this market until basically we failed this breakout. So if we look at this on the S&P 500 futures, it was this level right here. So 6810s or 6811s, whatever you want to call it. This huge prior weekly range. I didn't really have a reason to look bigger picture short until this range ultimately fails. So we did do that last week. So the one thing that I noted as well is that if we basically failed this range where I would have expected us to go was right around the midpoint of that range, down into we'll call it 6650s on the cash index, and it's a little bit lower on the futures index. But the big thing now is that we have a few things that have happened. Obviously, we have this failed breakout. We have a lot of volume trapped above. What we want to see now, basically, again, if you want to be a seller, bigger picture on this market, which still don't know if I'm there yet, is we want to see us basically fail to break back outside of this range. So we want to know whether or not we have a failed breakout that's going to stick and keep us back into this range to start printing lower highs and start correcting this market down. So from the highs, we've already basically put in a full 5% correction down. 4%-ish on the cash index, around 5% on the S&P in the ETH sessions, which is significant. So that's a significant move in a very short amount of time. And the one thing that we really need to pay attention to now is whether or not there's continuation selling and whether or not sellers actually want to continue this trend lower with lower highs, lower lows, basically, right? So what we're looking at here, that level that we broke back under is 68.10, 68.13, somewhere in this range up here. So we had again, really nice two-way trading all week, last week basically, but we failed back inside, and we basically went back to that prior mid-balance point, and we set a new weekly balance range with the highs up at 69.53s and the lows at 66.55s. So the weekly is back in balance. The daily is still one time framing down, and the monthly is still one time framing up. So short term, the way you could look at this is that sellers are in control until basically the daily balance is reestablished and we start trying to frame value higher. So what we need to pay attention to here, basically right off rip, is whether or not that huge rally from the lows on Friday sticks. So a couple things happened on Friday. You can see blues printed at the highs, marking a top on this, and we have blues on my system printing on the lows. That's pretty significant for me. So this is the 50-day simple moving average down here, 6706s on the daily time frame. We printed blues and we rallied strongly the entire afternoon, especially on the NASDAQ, with extremely large buying, like a ton of buying with real size. So the big thing I'm looking for this week, especially early on, first and foremost, we're going to be using the M period spike base that we have at 6740s. If we're holding 6740s early in RTH, then it's going to be all longs for me. I'm going to be looking for those long continuation trades to get us back up over, obviously, the regular trading hours high of 6765s in here. Set the daily back into balance, and then I'm going to be looking for those long continuation trades back up into last week's VWAP area, basically at 6790s to 6800s. And then the big test really will be whether or not we can print back over 6810, 6813 range, which is the top of that prior weekly balance range. It's also almost perfectly 50% of this new weekly balance range that we've printed. So bigger picture really for me is that with this huge washout that we had, a lot of volume came in. We did print a blue. We're back over the 50-day simple moving average. If we can start printing back above 6810s, then again, I'm going to stay on the long side. I'm going to be looking for the poor high at 6858s. Up in here, I'm going to be looking for this to get cleaned up, and I'm going to be looking for last week's POC at 6880s to trade and print. So early pivot will be 6740s. I'd still be willing to be a buyer basically into the bottom of last week's value. So what I want to see if I'm a buyer, and I'm leaning more towards the buy side again because of the fact I have blues printing here and because of how strong this Friday rally was, printing a neutral extreme up close day, which generally favors continuation, I'd be willing to be a buyer down into 6680s as well. What I don't want to see is I don't want to see last week's low go. So I don't want to see them lose 6655s and change the weekly time frame to one time framing down. I want to see this basically stay in play. If we do see this tested and you want to be on the buy side of the tape, you need to see a massive response away from it. You need to see a huge sweep, and you need to see a lot of volume come in and press us away. Because once we start the weekly into one time framing down, the potential for a larger correction is open, and we need to start looking potentially for those sells back lower. I could be wrong. Obviously, in this view, we could potentially be starting, a bigger move down. But at least in my view, when I see something like this happen into the low, and when I see the response, especially on the NASDAQ, into this low, into 24,800s, and the buyers we had up into 25,030s, can't really look short on this in the short term. I more think it's at least going to be a covering rally, at least get some relief and move back up into these mid to upper ranges before there's any potential to sell this back down. And I think with the size that we saw in the NASDAQ, the potential for this to move up higher is definitely there. So that's how I'm going to look at it at least. But so big things are early pivots, 6745s. Again, if we have acceptance outside of this immediately, then I'm going to be looking for those long continuation trades back up into these ranges like we talked about. If we end up failing this, if we fail the M spike, I'll probably be sitting on my hands until we basically backfill last week's Friday's value down here and see what kind of response we get into 6680s. Because again, I don't really trust being a seller into this range with everything that I saw on tape. I would only really want to sell this much higher, like fails up into 6900s, or real fails below last week's low at 6655s. Otherwise, I think that we're going to at least backfill a lot of this range this week. NASDAQ, I had blues print as well, almost exactly into the lows as well on Friday. So it's going to be the same thing that I was saying on the S&P. So the weekly, again, is formed back into a balance range. I'll be looking to be a buyer basically from the spike base of 120s down into 25.030s into this range, which is also POC. So pretty simple. You can just use this range down here. I'll be looking for this to hold to get us back up into 25.390s and potentially back up all the way and backfill this gap up into 26K. And again, we could see fails up in here that sets up a lower high on the weekly. It's entirely possible. But in the short term, I'm going to be looking for those long continuation trades and see if that momentum sticks from Monday and see if that neutral extreme up close day that we had basically is validated. And again, same idea. If you want to be a buyer, you do not want to see the current balance range that we have on the weekly start to go. We do not want to see under 24,700s. We don't want to see acceptance under that. That opens the door to much, much lower. And again, if we see activity down here, as a buyer, you want to see big sweeps and a huge amount of volume come in and drive us away. Basically a look below and fail on either index or both, and no acceptance, which is time and volume spent under 24,700s. This will open the door to a lot lower if we start accepting below 24,700s. I don't necessarily anticipate that, but again, I don't know what's going to happen this week. We'll have to see. So, fairly simple. The big thing I think that's really putting me in the camp of looking for, at least technical fills and at least some really nice long trades up here, again, is the fact that my system is printing blues. We printed blues up into the highs. I did not pay enough attention to this. These printed, I was not on guard enough to think that we'd get 1,000 points down in a week. I royally dropped the ball in my own system, not trusting this. And, it's just a mistake. I know everybody played this absolutely perfectly and, held for a full 1,000 points lower. It seems to be the trend online. Absolutely nobody got stopped out anywhere here. Everybody played this whole move, of course. It's perfection. But in my case, I didn't trade it well. I did okay. Thankfully, we had big sweeping ranges. I made some really nice points last week, but I should have paid more attention to this. And I am sure as hell paying attention to this printing into the bottom here. So that's what I'm going to play this week. Hopefully that all makes sense. If you have any questions, leave them down in the comments. If you like the video, subscribe to the channel if you haven't. I appreciate your time. Thanks very much.